So let's start off by asking you about just the impact of the events over the weekend with Dominique Strauss-Kahn. Do you see them having an impact on global markets?
Well, if you look how markets have traded since they opened in Asia this morning and through Europe so far, they are doing. It's irrelevant of the particular circumstances. The timing is extremely unfortunate with the delicacy of the European financial situation and Strauss-Kahn being due to be in Europe to be involved in the discussions about Greece. There's a vacuum. Now, what one would hope that the IMF is sufficiently flexible and with John Lipsky taking the role, that it won't turn out to be the case. But as you can see, people are nervous about lots of things, and particularly this European situation. You know, when I look at things that can go wrong, and when I put on my hat about what worries me, the European thing is the one that worries me. So it's quite unfortunate. Let's hope the policymakers can ignore his personal circumstances and just get to deal with the issue.
No, but I mean, you know, putting aside his personal circumstances, the fact that he's not here, and it doesn't look like he's going to be able to come back, means that the IMF has to presumably appoint somebody new quite quickly. I mean, I know John Lipsky's there now, but that's very much an interim role, isn't it?
Well, in the broader scheme of things, the whole future of the IMF leadership itself is a fascinating issue. It seems to me personally pretty obvious, coming at it from my view of the world, that it's about time we needed to give the chance to somebody from the BRIC world, or probably specifically from Asia. You got to think at the margin that this adds the likelihood of that. But you know, in the strange world of international diplomacy for big top seats and the kind of intricate way the US and Europe have played it.
Have you any personal thoughts on who particularly from the BRIC nations would be a possibility? Well,
there's a number of people from each of the BRIC countries, and certainly around the BRIC group in general, that I think could qualify.
You're going to give me a name?
Pretty eminently. You know, I'm so close to a lot of them that I wouldn't want to go that far, but I think there are people that have worked at the fund from the BRIC or growth market world, and have got lots of expertise and competency and understand the way the fund needs to function as a business, and might be able to take it into advance it even more than the fund's doing into this new world of responsibility it has. But
well, I mean, obviously the major issue, as you've said, is what's happening at the moment in Europe. I mean, Greece today are asking for an extension. Whatever the IMF does, it's got to come up with some decisions pretty quickly, doesn't it?
I'm in that camp. I think we've travelled, on the one hand, so far in terms of the market price, but on the other hand, so little in terms of trying to put this issue to bed. Having been around as long as I have, when it normally gets into a battle between policymakers and the markets, as much as it's become fashionable to, criticise markets, the markets usually are right. And it seems to me that it would be better for the sustainability of EMU, however tricky it is, to somehow get this restructuring, reorganisation, whatever you want to call it, out of the way, and so we can move on. If we don't, as we can see, it just gets worse and worse for Greece, and then it seems to spread ever so slowly to other places. And having gone through so many of these kind of things, the Asian crisis in particular sits in the back of my mind. This could get a lot worse for a lot more countries unless policymakers do something to improve the credibility of the operational structure of EMU.
I mean, if we look at the idea of Greek restructuring, there does seem to be a thought from Germany that they could try and put it off until after 2013. Do you think that's just not tenable at the moment?
Well, one of the reasons why I said what I did a minute ago in the style in which I did is Germany has different views depending on who it is and depending on what day it is. But it does seem in the past month, broadly speaking, that important German policymakers now think something needs to be done about Greek debts, whereas until that period, a month ago, for most of the past year, there was no acknowledgement of that at all, and I think they're right. The idea that you delay anything to 2013, I just don't see how that's going to be feasible.
No, there have been comments that this would be a catastrophe, that some kind of Greek restructuring, default, call it what you will, would be a catastrophe for Greece and potentially for a generation. Do you think, I mean, the markets, as you said, have already up to an extent factored this in? Now, what kind of effect do you think a restructuring would have both for Greece and for the Eurozone in general?
Well, a lot depends in famous phrase, devil in the detail, but generally speaking, given where market pricing is, and linked to what I was saying before, maybe the catastrophe is if they don't do something soon. I've gone through so many of these things, and that I'll reflect back on something very close to the whole BRIC theme. And when Argentina went off its currency board in 2001 and had to default, it was assumed that Brazil would necessarily follow, but because there was such a degree of response policy-wise in Argentina, and Brazil made their policies clear, there wasn't. And I think if we can do the restructuring in circumstances where Greece has got a chance to breathe, it's in circumstances where policymakers can have something credible to say about Spain, and we can agree a more common structure of how the fiscal rules are going to be applied in Europe, maybe it would be an enormous sigh of relief and European markets might actually rally. It's not entirely clear to me that a Greek restructure in this stage is bad at all. The references and comparisons with Lehman are not really very valid. Lehman was a big shock because it was a big shock. We have all been sitting around talking about the Greek problem for over a year. So it would have to be handled really badly for it to have the kind of contagious effects that we saw post-Lehman. Or at least I hope so.
So therefore Ireland and Portugal wouldn't necessarily have to default or restructure themselves? Well, I mean, it doesn't look like Ireland's got an awful lot of choice in the long run.
It seems to me that in all three cases, it's not a default in the classical sense. It's really a bit more about restructuring the maturities for payment and the circumstances in which how they will pay and who will share the burden for adjusting the time maturity, rather than a classic default. But the danger is if the Central European policymakers try to postpone it for a rainy day, that one of these countries will come out and default at some stage, and that's when the downside risks get bigger.
Do you have a time frame in mind for when they need to do this?
The sooner better. Sooner the better.
Now, when you said that things keep you awake at night worrying about the sovereign debt crisis, is it Spain that concerns you most of all?
It's the whole, I don't really think about this as a classical debt problem. As occasionally people mention, but not often, if you take the whole of the European area together, the actual deficit and debt to GDP relationship is better than the US, better than the UK, and infinitely better than Japan. So I don't think in that sense that there's a lot of true global evidence that this is a real debt crisis. I think it's a crisis about the leadership of EMU, the governance standards, and the boldness of policy making, and that does keep me awake at night because they're not easy issues to deal with. On one level, it's almost like we sort of realise now that 11 years on, not all of these countries should have been in EMU in the first place. But it's easy for me to sit here and say that. For the policymakers to deal with that reality, it's just so difficult, because it's certainly not easy to just say, well, you should leave, or they say we want to leave, because that would be highly uncertain. And of course, despite the problems many of them have got, there are considerable advantages of being in it. But what we need is greater decisiveness and true leadership about the operational structure of European Monetary Union, so that people aren't so fearful about the whole thing's future.
And Mario Draghi at the ECB, do you think that would be a good call? I
think Mario would be a fantastic call. I think replacing Trichet is a really tricky thing. I often think his style of leadership is underestimated against the background of what we've just been talking about. To be an effective leader of the ECB, where you're constantly having to understand the political environment in which you're operating, there's no better person of experience and skill at that than Trichet. So trying to replace him is tricky, but Mario is a very talented person. I had the benefit of being a partner of his for a brief while at Goldman, and I think he's an excellent choice.
Now, let's look at the relationship between GDP growth and equity returns for a country. When we see an equity boom, we're not necessarily seeing GDP growth. There doesn't seem to be a correlation. And yet you argue that actually, if you look closely, that you will find one.
Well, it's very interesting that into my new life, trying to steer as a chairman this big asset management company, you find amongst investors this frequent raising of historical evidence that the highest growing GDP countries have not delivered the strongest equity returns. And in that regard, a lot of them say emerging markets aren't good places to put their money.
This is if you look at somewhere like China.
If you look, and China is at the core of this oft-raised issue. You can't deny statistical facts historically, and it is generally true that has been the case, not just with China, but with many countries. I think one of the absolute best equity markets going back as far as you can in history is actually Switzerland, which is one of the lowest GDP growing countries. And these things are true. The dilemma one has as a forward-thinking person is also the whole idea of, is history a reliable guide of the future? And within it, and goes to the core of why we've written this paper, are countries like China and India and the BRICS and other countries that we'd call growth economies, are they the same in the future as they were in the past? It certainly seems to me right now China is going into the early stages of a whole new phase of development where growth is all about quality as opposed to quantity. If you take somewhere like Brazil, the idea that Brazil is the same as it was in the past, to me, is ludicrous. There was good reasons why some of these countries had really disappointing equity markets in the past, because they were always having major crises. 15 years ago, I'd sit around with some of the traders at Goldman and describe some of these places as submerging markets, because about the only thing you were guaranteed that at some stage they were going to blow up.
So you're thinking that China actually is going to be able to sustain an 8% growth rate, or you're thinking that the equity markets are going to be able to flourish? Well, I think
the thing that we've shown in this paper in particular, which we think is key, it applies way beyond just China. And it's a common thing that's true investing in anywhere, and it's as simple and as complicated as I'm about to say. The absolute key is the market valuation and whether growth surprises or not. So you want to be looking to invest in countries that are cheap and where valuations don't really acknowledge the potential, and the growth potential positively surprises. And the reason why the whole BRIC investment story did so well the past decade is because people regarded them as a waste of space, and they all, generally speaking, delivered major positive surprises. Can they and China do the same thing over the next decade? We're going to have to see. But as it relates specifically to China, what is so interesting to me is that the Chinese market has got the best value it's had for about 3 years, since before the crisis, because the market's gone nowhere and they've had a lot of growth, so the earnings are strong, but the market doesn't really want to take the risk of investing there for these reasons. And at the same time, and this is key, the Chinese policymakers are trying to adjust the nature of how China grows going forward, and I think it might be, albeit a bit softer growth, more sustainable growth and better quality of growth. And if that turns out to be true, we'll look back and realise that in fact China was worth investing in. But we're not going to know the answer to that this afternoon or tomorrow. Okay,
we'll come back and we'll sit and have a chat again when we do. Jim, thank you very much indeed.
My pleasure.